Welcome to Disciple Well Strategies. My name is Austin Garner. In this video, I want to go through the process of banking. And the reason is, just as I've revealed in my other videos, that I believe God says in His Word to His people that we have been blessed by God, and therefore we should lend to many and borrow from none. And this this is a paraphrase, by the way, of Deuteronomy 15:6, my paraphrase. But this instruction that individuals should be lenders is all throughout Scripture. And we should control the lending function in our own lives and within our own community rather than a banking establishment or third-party lenders. Nelson said it this way. He said, banking is the most important and most profitable business in the world. It should be controlled by you and me. And so if we're going to start some form of privatized banking system for ourselves, we need to understand the process of banking and then also how we can do it individually, right? So in Nelson's book, Becoming Your Own Banker, in part 1, he lays out this comparison. He goes through and lays out how an individual could start a bank. And he goes through the specific process of a typical bank. And the very first step in starting a typical bank is getting educated. You got to know the business. You got to get an education and learn how to start and operate this business if you want it to be successful. And this is going to require some time and money and, of course, discipline. I mean, on the front end, I might add, even before the whole thing begins. And truth be told, this is how any success happens in any endeavor. You have to have discipline and typically money and time to put into the educational aspect of it, to learn the business. Then you got to get some capital to start. And we're talking like $20 million plus in a liquid form. Usually that means that it's earning very little interest while it's waiting, right? And that, this is just for the capitalization phase to get the bank started. Then you've got to apply for a charter with the Federal Reserve. And the Fed does not hand these out willy-nilly. It's not easy. And sometimes the waiting period can be up to 10 years. So while you're waiting, you could be finding the proper location that you can build an attractive building on that will attract people to want to do business with you. Again, very expensive process well before you generate any revenue. And if you get a charter, and if you have been able to build the building, well, then you got to hire good talent to help you run this business. And to incentivize them to come work for you instead of your competitors, you may have to pay them a little more wages than the competitors would, right? And then over time, their abilities and their efforts, their time will become an important contribution to the success of your banking business. And then you got to go out and attract depositors, right? You need people to deposit their money with you, which means you may have to pay a little higher interest rate than your competitors as well. So again, money going out before it's coming in. But then the deposits do come in. If people like your building, they like your staff, they like the interest rate that you're willing to pay, that's what's going to motivate them to do business with you on the front end. Then, after those deposits come in, finally you can start lending money to others. And there's a cost to those loans. There's a cost to lending money. But as the borrower pays back their loans, you've finally begun to generate income for the first time. And those loan repayments are the revenue that pays this entire operation. All these expenses that we've built up so far eventually will be funded solely or primarily by the loan repayments. And I mean, potentially after many more years, eventually the revenue should catch up to the expenses and then exceed the expenses so that the owner can finally generate income of sorts. And the owner typically receives his share of the company's profit in the form of dividends. But the owner most likely is not going to stop there. You know, if he's profitable and he's already put in the effort and the time and the money, the capital to start this operation, well, he's not going to stop there. Logically, he's going to expand to maximize his profit potential and start satellite branches, right? So, let me ask you a question. Why would anybody be foolish enough to go through this incredibly long, arduous process to start a typical banking establishment? Because it's insanely profitable. That's what Nelson pointed out in the quote that I read at the beginning of this. Banking is the most profitable business in the world. So, if you are someone who has enough capital, has enough patience to go through the startup phase of this operation, it can be worth it in the long run. It can be really worth it. So, the whole process of banking is universal. It's the same for us. If we're going to start some kind of banking entity on a privatized or on a personal level, we're going to have to go through the same process. It's just not as expensive and it doesn't take as much time. And the whole system can be customized according to your individual needs. But it does start with education. And I always recommend starting with Nelson Nash himself. What did he write? You need to read his books, Becoming Your Own Banker and Building Your Warehouse of Wealth. That's a starting point. Another book option that I highly recommend is How Privatized Banking Really Works by Carlos Lara and Dr. Robert Murphy. And the Nelson Nash Institute also has a lot of great content on their website, as well as their YouTube channel. Matter of fact, many of their YouTube channel, their YouTube videos are of Nelson speaking and talking with others. So highly recommend the content that they produce. And then also there is a podcast called Banking with Life. And the hosts of that show are my personal friends and mentors, James Nethery and Ryan Griggs. Ryan also has a lot of articles he's written. He is an economist and also a very successful practitioner, as well as James. But Ryan has written many articles, and he has an incredible YouTube series about the mechanics of whole life insurance. Highly recommend watching it. You can check his stuff out through his website, griggscapitalstrategies.com. All right, but after you gain an education and you're ready, you feel like you're ready to take that next step. You realize how important it is to control the banking function in your life, and you know enough to get started. Well, now you got to apply for it. You have to go through the underwriting process. You have to qualify for life insurance. But even if you are uninsurable and you can't qualify for life insurance, well, perhaps someone in your household can. You can actually own policies on other people that you have an insurable interest in. So don't let your insurability stop you. It's still a good idea. It's still a great strategy. But then after the application process, after the policy has been issued by the insurance company and approved, and it's ready to start accepting premiums. Paying premiums is your capitalization strategy. You got to get some money into it. As you learn this process, you'll come to realize, you'll come to believe that paying premiums is the best thing you can do with your money. Knowing that you have full access to it, not full initially, but like over time you get more and more, but a substantial amount in the front end. My point is that it is the ideal capital strategy, and so you will learn that paying premiums is the absolute best thing you can do. And so you should get as much in as you can. You should pay as high premium as you can, that you can wrap your mind around based on your circumstances. But then as the capital builds up, you're ready to make loans, either for your own personal needs or for an investment opportunity, whatever you prefer. The money for the loans comes from the investment portfolio of the life insurance company, not from the cash value. The cash value is actually used as collateral for that loan, and therefore the cash value can continue growing uninterrupted. That is, if it's a non-direct recognition company, but we'll talk about that in another video. And we'll also talk more about the loans, how loans work, and how cash value is collateralized in another video. We'll talk about that also. But anyway, as the cash value builds, you have more and more access to capital, your capital, to lend, to borrow for your needs, and to take advantage of profitable investment opportunities, and also to give generously. You can give. But then, a lot of times when we think about loans, we think about interest. Yes, there are interest charges associated with policy loans. That's not a bad thing. Think about this. You are an owner of the company. Paying interest to a company that you own is a good thing. I mean, that is, if you want this business that you own to be successful and to stay in business. Nelson drives this home in Becoming Your Own Banker in part 1 when he goes through the grocery store illustration. He kind of sets up this principle that you should want your business to be profitable. And then he shows the consequences of not paying what's due with the First National Bank of Midland, Texas example in there. He goes through the brief history of that and what the demise of that institution was. But as the insurance company generates revenue from all its different investments that it has, real estate, bonds, mortgages, contract loans, like a policy to policy holders, that revenue comes in to cover expenses. They have hired help. They already have the utilities, the real estate, the office buildings. They have the professional, they have the hired help, the salespeople already in place. And so the revenue that the insurance company earns on their investment portfolio and on their premiums, their premium payments, they use that to pay expenses. And as their revenue exceeds their expenses, they can generate profit. I do want to point out that the expenses of a life insurance contract are built into the premiums, and they're prorated across all the different contracts, all the different policyholders. So it's equitable, I suppose. I wanted to point that out. But then as the revenue exceeds the expenses, now profit can be realized in the form of dividends to the owners of the insurance company, which are the policyholders. Just like in the banking example, the bank owner can now start receiving dividends. And Dividends are not guaranteed, but Nelson instructed us to prioritize finding mutual life insurance companies that have a long history, at least 100 years of consistent dividend payments. So that's what the goal is. But then as your abilities grow, as your income increases, or your expenses go down, or a combination of both, you're going to have a need to put your additional income somewhere. And if you've already paying your total premiums, you have no more room to pay more premiums in your existing policies, and you've already paid off your policy loans, well, where else are you going to put money? Are you going to stack it up in somebody else's bank? Well, no, you want that to go into your bank. So then it's time to expand. And just like in the banking example, you're going to start new branches, which just means you're going to start new policies on yourself, on the people around you. And the proper, well, I shouldn't say proper. I should say generally the right way to expand is to maximize your insurability on yourself first. Then, I'm sorry, depending on who I'm talking to. If you, who I'm talking to, is the primary income earner of your household, they should be the first ones insured and maximally insured. That should be the goal first. And then going to the spouse, whether they earn income or not. Then you can start thinking about kids and grandkids and even other people like business partners, your parents. There's other people that you can consider that you might have an insurable interest on. All right, so in summary, just by starting a high cash value dividend paying whole life insurance policy with a mutual company, we as individuals can become the owner of a very profitable banking system. Yes, we are the only depositors of our bank, but we can also choose to borrow that money from our own bank for any reason. We don't even have to qualify. It's just a couple clicks on a screen or a little form to fill out. And then, if I'm the person taking loans and deploying money from, that capital from my own banking system, well, then I'm functioning as my own banker. So, the infinite banking concept gives us the ability to participate in all four of these roles associated with a banking establishment: the owner, the depositor, the banker, and the borrower. And properly structured whole life insurance is the absolute easiest and best way for you and I, for individuals, to own and control the most important and most profitable business in the world. But before you begin, you got to learn the business. At the very least, you got to read Nelson's first book, Becoming Your Own Banker. But you should get started as soon as possible if this interests you. So, that's it for this video. Hope it was helpful. Hope you enjoyed it. As you're exploring the infinite banking concept for yourself, please let me know if you have any questions. You can leave comments in this video or any of my videos, or you can reach out to me through my website, disciplewealthstrategies.com. Until next time, thank you for watching. Have a great day. Bye.